firstly they was scheduled on the January, but now it is rescheduled, and it is now your PPB exam is scheduled on the 13th February, while AB exam is scheduled on the 26th February, and LRAB exam is scheduled on the 27th February. If I'm not wrong, please just check the website meanwhile. So now this is the time when you should prepare at very best level, and you should watch the every sessions I have taken here, because I discuss all the questions that were based on the previous memory based questions. So prepare the notes as well. Okay, so this is a very special series that I have taken here. Okay, so now let's start the session, and one update from our side, that is we are also going to start a foundation batch, and that batch is going to start from the 7th February 2022. In this batch you will get the mock test, ebook, as well as the live lectures, and this batch is especially for the English medium aspirant. In this batch you will understand everything from zero to advanced level. By subscribing this batch you will get the mock test, ebook, as well as the live lectures, and with the code of Y422 you can just avail a 78% discount also on this package. Okay, now let's start the session. Okay, so first question, that is you have to find the present value of 37,000 rupees, and to be required after 5 years, and if the interest rate is given 9%. Okay, so this question is from the capital budgeting chapter, and as in the chapter I already explained the relationship between the present value and the future value. So we know that future value, that is equal to the present value multiplied by 1 plus our rate of interest, and it is to the power of n, which is number of the years. Okay, so look, in the question, what we have to determine and what the question it is. It is a question that you have to require 37,000 rupees after 5 years. Okay. And so you have to just, and the rate of interest that is given 9%. So you have to just tell the present value. What will be the present value? So that that present value after 5 years become the 37,000 rupees, and rate of interest that is applicable, which is the 9%. So the simple formula I already explained in my lectures, that is future value that is equal to the present value multiplied by 1 plus r to the power n. So if we have to calculate the present value, so just write here, we can also write in this way, that is present value is equal to future value, and it is divided by the 1 plus r2 to the power n. And the future value, what we have to just consider here, that is 37,000 rupees. So just write here 37,000 rupees, and it is divided by the 1 plus. Now the rate of interest, which is given a 9%, so we can also write 9% is equal to 0.09, isn't it? We can also write rate of interest, that is 0.09. So now just put here 0.09 and is to the power 5. So you have to now just calculate 37,000, and it is divided by the 1.09 to the power. So you have to calculate in the calculator, which is 1.09 to the power 5, and you will get the answer 1 minute, that is 37,000 rupees. And solve in your calculator and just tell me the answer, just tell me the value of this. Look, let me calculate this. So this would be equal to the 1.5386. Fine. And now just solve this equation, that is 37,000 divided by the 1.5386. So the answer would be, that is 24,047.84 rupees, isn't it? Okay, so that would be the answer. So the correct option, that is the third. Okay, that would be the correct answer, that is 24,047.84 rupees. Okay, so now you understand, you will definitely get one question from these kind of the concept, like where you have to just find out the present value or say future value. So if the present value, if the suppose the future value is given and we have to calculate the present value, present value here. Suppose that in the question like present value is given and you have to just calculate the future value, so the same formula you have to apply for every question. Okay, so you have to just memorize this, that is future value is equal to present value and it is multiplied by the 1 plus r to the power n, and where n represent the number of the years, okay, and r represent the rate of interest. I think it is clear for everyone. The question is, a machine is purchased for 1 lakh rupees and installation charges of 10,000 were incurred and depreciation, that is 10%, was provided on a straight line basis. So the machine was sold for 60,000 rupees after 5 years. So we have to calculate the profit or loss on the sale of the machine. Okay. So as we all know that this question is from the depreciation chapter, and the method we use to solve the depreciation here, that is the straight line method. And in the straight line method, the constant rate of depreciation applied. The constant rate of depreciation applied, or say the value of the depreciation amount for the first year, that would remain for the that would remain same for the every year, okay, or say every useful years, okay. So a straight line method, that is known for the constant rate of depreciation, and the machine that is purchased for the 1 lakh rupees and the whatever the other charges that incurred. So we have to just consider the total cost of the machine. Every time you have to just consider the total cost of the asset. For that you have to just evaluate the depreciation. So here the machine is purchased, so the total cost of the machine, that is the cost of the machine, that is given 1 lakh rupees. So just write here, and the extra expenses that incurred, that is installation charges, that is 10,000 rupees, and the total cost of the machine, that would be 1,10,000 rupees. Okay, so from this we just evaluate first, that is the total cost of the machine. Now the question is that if the depreciation, that is 10%, was provided on the straight line method, so if the machine sold after 5 years, look, in this question the question is the machine was sold after 5 years, okay. So we have two choices, either find out the each year value of the total value of the machine after depreciation. So we have two choices, either just calculate the either calculate for the calculate the value of the machine after depreciation for every year, or just multiply by the just multiply by the 5 times to the first year depreciation. Because in the straight line method, if the first year depreciation, that is suppose that is 10,000 rupees, suppose that, okay, just assume here, suppose that if the depreciation for the first year, that is 10,000 rupees, that means it would remain same for the every year. That means second year again the depreciation would be 10,000, third year again depreciation would be 10,000, fourth year again depreciation would be 10,000. Okay, so just instead of solving like this, we just multiply by the number of the years we have to calculate. So if the machine was sold for the 60,000 after 5 years, so now just calculate let me remove all these stuff here. Okay, so now we have to just solve the depreciation for the first year first. Okay, so for the first year depreciation, just 10% that is depreciated, value of the machine, that is 10% depreciated. So the total value, which is 1,10,000 rupees, and if it is 10% depreciated, that means the 10% depreciated, that means it would be the 11,000 rupees. That would be the first year depreciation amount. Okay, so that means for the first year the value of the machine will be depreciated 11,000. Again second year, that again 11,000, third year again 11,000, fourth year again 11,000. That means if we just multiply by the 5 years, so that means the value of the machine will be depreciated 55,000 rupees. Okay, so value of the machine would be depreciated 55,000 rupees here. So now after 5 years, if we have to just find out the value of the machine, after depreciation, so it would be the total cost of the machine, that is 1,10,000 rupees, and the 55,000 rupees that is depreciated. Okay, So if we just subtract from the 1,10,000 rupees, we get the value of the machine after depreciation after 5 years. That would be 55,000 rupees. That is coincidentally the depreciated amount and the value of the machine after 5 years. That is the same. That is coincident. Okay, and nothing else. So the value of the machine after 5 years, that is 55,000 rupees, and the machine was sold for the 60,000 rupees. Okay, that means if the question is, that means our machine cost after 5 years, that would be the 55,000 rupees, but we sold for the 60,000 rupees. That means it would be a 5,000 rupees profit on that machine, on, or say we just received the 5,000 rupees profit on selling of this machine. Okay, is I think it is clear for everyone. So we have to just calculate the value of the machine after depreciation, and after that the value of the machine after depreciation after 5 years, that would be the 55,000 rupees. Okay, it will be the it how it just determine like the total cost of the machine and minus the total depreciation in 5 years. Okay, so from this we just find out the value here, and if we just sold this machine for the 60,000, so the profit that would be the 5,000 rupees. So the answer would be here, that is third. We just received the 5,000 rupees profit if we just sold this machine. Okay, so I hope it is clear now. Now understand another question, and that question is also from the depreciation chapter, and it is kind of a tricky question. And here the price of the computer, like the cost of the computer, it is given. Okay, so the cost of the computer, that is given 50,000 rupees. Again, this is a again this question is from the depreciation chapter, and if nothing is mentioned, so we just assume that we have to solve by the straight line method. Okay, so the cost of the computer, that is given 50,000 rupees, and residual value, or say it is a salvage value, so which is given 10,000 rupees. So just write here 10,000 rupees. Now the trickiest thing, that is here the hours work for the year given. Okay, and estimated life of the computer, that is 20,000 hours given. So we know that we always have to just calculate the depreciation with the help of the useful life. Okay, so useful life, and it is just in terms for the years. Okay, but here it is given, that is a total estimated life of the computer, that is 20,000 hours. Okay, and we know that our computer that work for the year, that is 6,000 hours. So it is given, that is it works 6,000 hours per year, and the total life, that is 20,000 hours. That means if we have to just calculate the total number of the years, or say total number of the useful life of this computer, so that would be equal to what? That would be equal to the total, that is 20,000 hours. So just write here 20,000 hours, and we know that it is divided by the 6,000 hours, and 6,000 hours, or say 6,000 hours per year. So if we just calculate here, we just get 10 by 3 years. Okay, if we just solve here, if we just calculate here, we just get the 10 by 3 years. Okay, so now we have to calculate the amount of the depreciation here. So we know that our total cost of the computer, that is given 50,000 rupees. So like here, so right here, that is 50,000 rupees, and the residual value, that is 10,000 given. So just write here 10,000, and it is divided by the useful life of the machine. So useful life of the machine, that is 10 by 3 years. Okay, so now if we just solve this equation, this will be the, we have to just calculate the amount of depreciation. You always have to just read the question first. Either it is given the amount of depreciation, or it is given the value of the computer after the depreciation. Okay, so in the case of the determining the value of the computer after the depreciation, so we have to just subtract the with the amount of the depreciation. Okay, so now the price of the computer, that is given 50,000, and the 10,000, that is the residual value, and the useful years. Look here, the if the total estimated life, that is given 20,000 hours, and we know that our computer runs 6,000 hours per year. So 6,000 hours per year, that means if we just divide by the 6,000, so we just find out from here that is the total number of the years our computer can be run. Okay, so that would be our useful life of the computer. So that would be equal to the 10 by 3, and now if we just calculate this, so this would be 40,000 and it is divided by the 10 by 3, and now the answer would be that is 12,000, that is 12,000 rupees. So that would be the amount of the depreciation. Okay, so the answer it is that is 12,000. I hope it is clear for everyone. Fine. Okay, it is clear for everyone. Okay. Now the next question, understand the next question, that is related to the amount brought in by the proprietor in the business and should be credited to. Okay, just understand this. Tell me the answer of this. This is a very simple question, but we have to understand the concept here. So that's why I included this question here. So look, in accounting, if I say in accounting, owner or say proprietor, okay, so say owner or proprietor, okay. So look, in accounting, owner or proprietor and its business, company or say organization, okay. So owner for in accounting, look, owner, proprietor, or say in the case of the company, business, organization, owner or proprietor and the business, company, organization, both are different entity. Okay, uh, suppose that this is a business of some proprietor and he is the actual owner, but for in accounting both are different entity, because the owner proprietor belongs to the natural personal account, while this business, company, organization related to your artificial personal account. Okay, so when the proprietor just suppose that this is the company. Okay, suppose this is a proprietor and this proprietor's name is A, and he just opened his company. Okay, and he just opened his company and he just started his business with a capital with a 50,000 rupees. Okay, so if he started the business with a 50,000 rupees, okay, and both belong to the different entity, that means it is belong to the natural personal account while it is related to your artificial personal account. So if I say, if the proprietor or say owner brought amount it's into a business or say it's into a company, that means that amount work as a cash for the owner while capital for the company. Understand this. The same cash, if I say the same cash, and if we have to just make the entry of this, suppose that in many times in the question, many times in the exam, the questions have seen like you have to just make the balance sheet equation, and where the transaction, that is A started the business or say A started the company with a cap with the 50,000 rupees. Okay, so you have to just make the balance sheet equation. So in the balance sheet equation we know that assets equal to capital plus liabilities. Am I right? Okay, so we just know that cash always comes under the assets. Cash always comes under the asset, while if A started the business with the 50,000 rupees, that means this 50,000 rupees would be cash for the A. Okay, so we just write here 50,000 rupees here for this transactions, while it is capital for the company. Okay, it is capital for the company, and or you also can understand by this that is it is a liability of the company. Okay, because just A infuse the capital here. Okay, so the same thing, that is the same rupees, that is cash for A or say cash for the owner or proprietor, and it is a capital for the company. So the amount brought in by the proprietor in the business should be credited to which account? So the answer would be that should be credited to the capital account. Okay, I hope it is clear. I hope it is clear. That is, it is just credited to the capital account. So the amount brought in by the proprietor in the business should be credited into the capital account. If I say while withdrawal of the cash, suppose that I say that is withdrawal of the cash from business by the proprietor, and it should be debited to the drawing account. It should be debited to the drawing account. Okay. So if the amount that is brought by the proprietor in the business, it would be credited to the your capital account. And if the withdrawal of the cash from the business by the proprietor, that should be debited to the drawing account. That's it. Okay, this is how we just solve the questions, and you will just get the multiple questions in the exam for this concept. Sometime you have to just make the debit and credit entry, sometime you have to make the balance sheet equations. Okay, so simply you have to just understand, we know that the balance sheet equation, I again just explain this, that is assets is equal to, we know that capital plus liabilities. And while cash is an asset for the asset for the company, while capital is the liability, or say capital is a kind of the liabilities. Okay, so the cash, that is 50,000 rupees, and capital, that is 50,000 rupees. This is how we just solve these kind of the questions. Okay, I hope it is clear now. Okay, so that's all for this session. I hope this lecture would be very useful for you. And if you're liking our effort, please do not forget to hit the like button on this video. And AB batch of the 3000 MCQs is starting from the 31st January on the from the Monday. You can also enroll on that batch. So if you're not downloaded the Adda 247 application, just download this and subscribe the Officers Adda 247 application, so that you can get the notifications of the live lectures as well as notification of the important news. Okay, and prepare for the best, and very best wishes for your preparation as well, because now exam is very nearby, and I think you all should be prepared at very best level. Okay, so thanks for watching me here, and thanks for joining me here, and like this video, share this video to your friends, and best wishes to your preparation.